Kitco News special coverage of the Precious Metal Summit is brought to you by Nucor Gold.
Gold's having another terrible day on Thursday, and I say another because it had a terrible day earlier in the week when the CPI data came out, but now it's doing it again. David Erfle joins us, Junior Mining Junky.com. Welcome back to the show.
Thank you very much for having me again, David. Always great to talk to you.
Part of my intro, but you know, I couldn't give you good news even if I wanted to.
Well, it's the Beaver Creek conference, and we're having the typical Beaver Creek curse. It happens every year.
Is that a thing? Okay.
It is a thing. It's, you know, we have the PDAC curse usually, you know, and then we also have the Beaver Creek curse. So, you know, it's these things happen.
So what they need to do is stop the conference. I'm kidding, and then gold will go up. No, don't do the wonderful conference. Please don't stop it. But why? Okay, down 2% today. This is even more significant than a couple of days ago when the CPI numbers came out. That was a spooky day for all assets. I mean, we'll talk about stocks too, but gold is down. Why is gold down 2% today?
Well, it's getting down to that Maginot line for the bulls, right? 1675 has been the magic number support for the past few years. You know, it's come down to test that level 5 times previously, and it's happened recently a few times. So, you know, gold, the bears are really pushing hard to run those stops below 1675. Today's Thursday. We got one more day left. You know, the only statistic comes out tomorrow is the Michigan Consumer Sentiment Index, and that's been terrible recently.
That has been terrible. Are you seeing any signs that sentiment could improve?
As far as the gold market is concerned?
No, I'm sorry, the consumer sentiment.
Oh, consumer sentiment? I mean, you know, it's a lagging indicator. Yeah. So, I mean, it could for a little bit because a lot of people thought that inflation had peaked, and they were wrong. So,
well, what does that have to do with the gold market?
Well, it has a lot to do with the gold market because the dollar has been the biggest weigher on the gold price, you know, and the dollar's getting up to that 110 level, and you know, that's really weighed on the gold price. And of course, you know, the Federal Reserve continuing to raise interest rates, and each time investors think that they're going to raise a certain amount, a statistic comes out and they start pricing in a higher rate, just like what happened this week. Before the CPI came out, it was 90% priced in that there was going to be a 75 basis point hike. Then right after those statistics came out, they started pricing in a 40% chance of a full percentage point hike. So that doesn't help the gold price either.
No. And when you're talking about technical support levels, gold broke below $1,700, like you mentioned. What's the key support level for you, David?
That is a key support level because it is the 38% Fibonacci retracement from after the gold price doubled from 1045 to 2100 in August.
Yeah.
The 38% retracement is 1675, and it's tested, like I said, 5 times before that. But the previous 5 times it came down to test that, we saw strong buying come in right away. So we saw intraday reversals. That's not happening today.
I guess it's going down lower then.
It sure looks like it. And like I said, today's Thursday, so we could have a weekly close tomorrow below 1675. And like I said, a lot of those stops could be run. But the one thing I'd really be worried about is a quarterly close below 1700. And that quarterly close is coming up right after the Federal Reserve Open Market Committee meeting.
You know what's really interesting, David, is that the DXY hardly moved today. Mm-hmm. And so, you know, usually if you told me, all right, the dollar rallied like it did on Tuesday, following the CPI print, well, that makes sense. But you know, the dollar's flat today, more or less. Stocks are down. Why is gold down? I'm going to go back to that question again. The dollar's not rallying. The stock market, gold should hedge against. Well, some people say gold should hedge against equity volatility. It's not doing that.
Mm-hmm. Exactly. I know it hasn't been a hedge against inflation, and historically, it really isn't a hedge against inflation. It's a hedge against stagflation. It's a hedge against loss of investors losing faith in government and currencies. And for some reason, investors still believe, well, maybe now they're not starting to believe this, but they believe that the Federal Reserve has a handle on things. Even though last year at this time they were telling us inflation's transitory, don't worry about it. Now all of a sudden they're hiking rates, higher than they've hiked them in 40 years. If the Fed does hike a full basis point, and I think the only way they will hike a full basis point next week is if it's priced in over 50%. If it's priced in over 50%, then that's not a surprise to the market. But I'm expecting a 75 basis point hike. If it's a 75 basis point hike, it could be a buy the news situation as far as the gold price is concerned, because this has been priced in for a while now.
Sure.
And the bear side of the boat is very overloaded here. So it wouldn't take much to get the shorts to cover, but we do need a strong trigger for shorts to cover here.
What's this trigger, you think?
Yeah, that the trigger could be, just a 75 basis point hike if investors, are a lot of investors are expecting a full basis point hike and it doesn't happen.
Mm-hmm. Do you think people are more long or net short right now on gold?
Oh, I think the commercial net silver position on the COMEX futures. I think that the commercials are the longest. They're the most net long. Close to in history. I think it's really close to that, and if you take small specs, which is a retail, they're massively net short. So when you see a situation like that, you usually see a bounce in both gold and silver.
So what do you think is gold going to do after the Fed meeting next week?
Oh, that's a great question. We could see a bear trap situation. There could be a lot of value-based investors waiting for that 1675 to break. They've been waiting to buy gold. They understand that the fundamentals for gold are only improving, as we go forward here. So they're waiting maybe for the 1675 to break and to come in and scoop up some cheap gold. That could very well take place.
The fundamentals of gold are improving. Which fundamentals are you looking at?
Oh, absolutely, yes. I mean, if you take a look at what's happening in the world, there's so many catalysts that could pop the gold price here. I mean, you've got the war in Ukraine could escalate. You've got China could possibly go into Taiwan. That's a possibility. These are things that I don't want to happen, and you've also got that President Trump could be indicted. I mean, they could actually try to indict former President Trump after the FBI raided his home. I think that would pop the gold price, because I mean you're basically indicting the Republican candidate, the top Republican candidate for the 2024 election. And there's also one other item that I certainly hope doesn't happen. The Biden administration could make it legal for illegal aliens to vote. Sign an executive order, something like that. That's a rumor on the Hill. I mean, I have no idea if that will happen. I certainly wouldn't want that to happen, because that would polarize the United States even more.
So basically, you're saying more political tension domestically could spike gold.
Exactly. I think, and it's ripe for a trigger to spike the gold price, because, like I said, the bearish side of the boat is so overcrowded here.
All right. Well, what about, just to play devil's advocate, what about the bearish side? I mean, suppose the Federal Reserve continues to get hawkish. Wouldn't that weigh down the gold price with higher interest rates?
Well, I think it would tank the stock market even more. And as far as recession is concerned, as far as I'm concerned, we were already in a recession. We had 2 consecutive quarters of negative GDP. Even though the White House came out and said and changed their definition of a recession 2 weeks before that, that second quarter negative GDP rate came out. So technically, the Fed is hiking in a recession, which I don't think that's ever happened before. They've never hiked rates during a recession before.
No. And also, except for one period, which was 1975, inflation has not continued to climb up during a recession. Mm-hmm. Exactly. So one could argue. So what's your take on inflation, very quickly? I mean,
yeah, I think it's morphing into stagflation, which is very gold friendly. I mean, gold does really well in recession and stagflation.
All right, well, let's talk about gold miners now. It's a sector that you're very familiar with, particularly the junior sector, but both the juniors and the seniors underperformed bullion this year. Why?
Yes, well, you've had the gold price basically trade within a $400 range for 2 years, between $1,700 an ounce and $2,000 an ounce, while the cost associated with digging it out of the ground, with exploring for it, and especially to build new mines has gone up exponentially. So when you have a gold price going sideways while the costs of doing business in all aspects of the sector going higher, that doesn't bode well for miners or juniors.
But is it normal usually in a scenario like this when gold is sideways for the juniors and the seniors to underperform? I mean, wouldn't it just go sideways as well?
Well, no, because we really haven't had inflation like this in 40 years. So we went from negative 2% inflation to over 8%.
Right. So a lot of it was due to margin contraction.
Absolutely.
Which is, according to your thesis, probably not going to improve unless gold pops, right? I mean, stagflation is here to stay, which means prices are here to stay high.
The gold price needs to go higher.
What is the junior sector doing right now to combat inflation, if anything?
Well, they're as far as exploration is concerned, they're cutting down exploration programs. They're cutting down G&A, as much as they can.
Yeah.
And but strangely enough, there's still a lot of companies that have a lot of cash. There's, even though the situation right now is very similar to late 2015, the fact that a lot of these companies still have a lot of cash is different. I wouldn't want to be a company that's looking for cash right now.
A company that's looking for cash. Sorry, what does that mean?
Looking to raise capital.
Oh, to raise capital. Yeah, well, I mean, financing situations are kind of terrible.
Super tight.
You did bring up one particular stock that outperformed the index, Orezone Gold Corporation. I'm looking at the market cap, $452 million, traded in the Toronto Stock Exchange. ORE is the ticker, and it's it's up from the year, which is not something I haven't seen any other company that's been like that. So what did this company do differently?
Well, they brought in a high margin gold mine on time and under budget during COVID, and during a time when inflation was rising. Okay. So they poured first gold here earlier this week, and they've also got a higher grade pit near the gold mine that they're de-risking right now. So this is and if you take a look at Burkina Faso, I know there's been a lot of problems in Burkina Faso as far as militants and things like that. But they're fortunate where they have a military shooting range compound right next door to their project, which is also very nearby the capital of Burkina Faso. So they haven't really been affected by any of the geopolitical concerns that have happened in Burkina Faso.
So generally when an investor, you mentioned to me offline that now is probably a good time to buy given how depressed valuations are. So let's say I want to get into the junior space. What are the criteria that I should be looking out for?
Well, it is a good time. It's a good time for a few reasons, because the situation in the sector right now is, like I said, it's kind of like late 2015, and in late 2015 we had an accumulative bottom take place in the sector, and I think that's taking place right now. So you have a lot of time to do proper due diligence, come to conferences like this, or you could even call up these companies on the phone, and they'll be more than willing to talk to you. They're looking for investor support. Yeah. So you can set up a Zoom meeting and you can ask them all the pertinent questions. You want to look for a serially successful management team that has access to capital, that already has enough money in the bank to finance them for at least the next 6 to 12 months. And you want to make sure that it's a high margin project that they're de-risking, and it's in a top tier jurisdiction, because those companies are on sale right now. You don't need to mess with the lower quality companies here, because the higher quality companies are on sale.
Can you give us another name that you like?
Sure, I can give you one more. Moneta Gold, me.to. Okay. And they just put out a study showing very, very robust economics at $1,600 gold, 12 million ounces in one of the best gold camps in the world, the Timmins mining camp. So, and they just raised money without a warrant. You can raise money without a warrant in this climate. That's saying something. That tells you the project is very, very good.
All right. Well, I appreciate you sharing your thoughts and picks with us. As always, thank you for coming on Kitco.
Thank you, David. Always great to talk to you.
All right, and thank you for watching Kitco News. I'm David Lin.
Kitco News special coverage of the Precious Metal Summit is brought to you by Nucor Gold.